Good morning, everybody. It's Jeff Fitzpatrick. It is Monday, 18th of November 2024, and therefore time for my weekly video log. This week, it's going to be quite short and sweet. The main thing I'm covering are my stock picks for the beginning of this week. And here we are. So those stocks that are highlighted in green are about ready to go. Obviously, depends on how the market opens, what happens to the charts this afternoon, but basically everything else is lined up for them. Those that are in sort of mustard, the difference is they are equally lined up. They're good quality stocks and everything else, but they're not quite ready. We're just waiting for the price to finish falling and to turn round. I'm expecting that over the course of the week and probably quite a lot on Wednesday. Root on the top left is a slight exception, and that's because it's one that really doesn't appear in any screening anywhere. It is just something that came through from the analysts. And we're now consulting the work of 4,500 analysts working for 150 different brokerages. And of all of the stocks that they were recommending, this is the top one, Root Incorporated. Make sure you get the right company, because if you put Root into your spreadsheet, you may well get the wrong one. But if you type in Root Inc., then you should get there. So this one, the only reason I've actually left it in is because it's possible, it's currently trading at about $88, and it's possible to sell something, a put, much lower than that, with a strike price of around $70 and to still get a worthwhile return on it. Therefore, whilst it's fantastic as far as the analysts are concerned, on many other levels it doesn't quite work, but because there's such a vast difference between the current price and where you can get a decent premium, then it's worth considering. Should also mention AEO. So AEO was figured, big in last week's video. I did recommend it. I did go for it. And I'm still saying that now. But we did have earnings due to be announced tomorrow, in fact, the 19th of November. And I see now they've put that back a week or so, so not quite getting earnings on it yet, but still good to go as far as I'm concerned. So what I've done with these, if I now go to just another part of this sheet, here we go. I'll blur that up a little. There we are. So these listed are those that you've just seen that were in green. And all I've done is put in their current price. Then I've looked for expiration dates where there's a reasonable amount of premium available at a price that's below the current actual price. So I put the strike prices in, and then I put the amount of premium they're showing. Now that's negotiable, and also premiums do tend to change a lot when the market opens, so they will need checking when the market's actually open. And I've also put in there the number of days and then the annualized return on capital. And you can see that we've got one there, which is very good, and that's Urban. So some good things about that. First of all, the current price of 38.22 allows us to get a strike price $2 below that. Next, the expiration date is the 29th of November. So that's only 11 days from now, and the premium is worthwhile. It's 3%, but if you do enough contracts, which I will, then that turns into a significant amount of money. And the annualized rate on that is nearly 100%. We've got one other there, which is also a 29th of November, DXCM. You can see more expensive stock, lower premium, not as good, 52% annualized, still worth having. Now, some of them, they just weren't worthwhile premiums having available at all. So that was SEE, which is Sealed Air Corporation. Again, be careful. If you just type the ticker in, you might well end up with the wrong company. If you type in Sealed Air Corporation, then you should get the right one. So Sealed Air Corporation, British Petroleum, BP, and TAL. So in those cases, if I go for them, it will be on a buy the stock basis. And then I've looked for the next highest point of resistance and come up with my target get out prices. They're not very high compared to the getting in price, but there again, I'm not planning on staying in them for a long time. So that's where I'm at the beginning of this week. I hope that helps. If you've got any questions, by all means, come back to me. What else can I tell you? Oh, I should tell you what I've been through to get to these. I'll just go back to the original thing here. So on line three there, FA and TA 12, I've got a nickname for that, but it actually stands for a fundamental analysis and technical analysis, and 12 is the number of stocks that I've chosen to have it throw up. I've then been through all of those, and the only one that I'm currently happy with is Root. The idea with these stocks is you get in on a particular day of the week because they're in this list. A week later, you look again. If they're not there, you come out. If they are there, you stay in, and so on. To be honest with you, I'm finding that a bit cumbersome. I am sure had I just done that from when I started this 3 weeks ago, I would probably be in a loss on those stocks. Partly because we had the election in between, but I took advantage of the election to stay in one or two of them longer and to get into profit. And I've also stayed with this Root one, but instead of actually buying the stock, I actually sold that very good, very healthy premium put. So I'm moving away from the very basic system suggested for this type of trading. The 4x4 list, they are literally taken from the TICN 4x4 list, pure 4x4s. Obviously, there are a lot more 4x4s than that, but I've knocked out the ones that didn't make it through the other filters, which I'm coming to now. I've done the same thing again for TICN 3x4s. That's stocks that score at least 30 for quality and 40 for value. There are a few more of those, but of course, I'm not so much interested in the quality part. I do want a reasonable amount of quality, hence a score of 3 is required. However, I'm looking to get out after fairly short periods, so I'm not looking to invest the rest of my life in this thing. The next one is Value Line 1, 2, and B plus. So these are stocks that Value Line have scored as a 1 for timeliness, but that is a strong buy recommendation, and at least a 2 for timeliness. Timeliness sorry, for safety. Safety is a weird one. I'm looking into it, and the more I look into it, the less I'm really impressed by it. A lot of it is really taken up by the next part of this one, the B plus. That's the financial strength indicator. And really, if you've got a financial strength indicator of B plus, the safety score begins to fall away. Existing is next column, and in there I've got stocks that the clubs that I work with are already in. And I put them through the rest of the checks as well. So they may not be, or they may or may not be 4x4s or 3x4s, but Better Investing, Stockmaster, and Zacks, and the charts all say, yes, these are okay. BI is Better Investing. That's the US equivalent of TICN with 3,500 investment clubs, 34,000 individual members. And they've also got a screening process, which I've gone through as far as quality is concerned. And the same again for Stockmaster, I've gone through and screened there. And then a Z value is Zacks. And on Zacks, that's a reference to stocks which are rated 1, which is a strong buy for Zacks, and a couple of other little parameters in there as well. They are growth stocks. That's basically it. So that's where it's all coming from, and that's where we're at for this week. I'll try and put something a bit more analysis into it next week for the video log. Until then, have a great week and keep making money.